Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1T10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys, All right, good morning everybody. Welcome back to another live stream. Guys, I'm really challenged by something this morning. The Edge Finder is down. It's not something that we've done on our end, but I know that there's going to be a lot of people who are probably like, where's the Edge Finder? It's not working. If I go to my browser and I just go to Edge Finder, you could see that it is a Google-based product. And the software that it's based on is currently down. So don't freak out. The Edge Finder's fine. It's just probably they're doing some sort of maintenance or server update or something on Google's side, but should be back shortly. No big deal. Although it is kind of a big deal for me because, I don't know what to do without the Edge Finder. It does my laundry. It drives me to work. It calls Ubers for me. It does my grocery shopping. So I don't know what to do without the Edge Finder. I'm just kidding. But of course, it does play a key role to what I do. Today is actually a U.S. Holiday in terms of the stock market. It's President's Day, I believe, and market is closed in terms of the stock market. Now, the futures market's still open. We've still got trading activity, but it is expected to be a little bit lighter than usual. You've got NASDAQ, SP500, Dow Jones, just slightly positive here this morning. Big winner here continues to be the DAX. The German stock market is absolutely going crazy. There's a number of reasons why this might be, but one of the biggest ones that you can kind of take the guess on here is that the market is optimistic that there may be some good news about the Russia-Ukraine situation. And the DAX is a major beneficiary of war stopping in Ukraine. Why would that be? Well, trade disruption, worries about, any sort of increased escalation between Russia and Ukraine and dragging the rest of Europe into it, hopefulness that perhaps eventually things can get resolved and sanctions can be lifted. Those are all things that would greatly benefit Europe, which, let's face it, is a large trading partner, historically has been a big trading partner of places like Germany and France and UK and all those countries, right? They're neighbors. So the DAX is up quite a bit. And And what's interesting here is that you can take a look at this performance here. DAX looks incredible, right? I'm jealous of those guys and girls who have been long the DAX. This is an incredible trade. It's working beautifully. Then you have, on the contrary, you have S&P 500, which is doing okay, but it's not nearly the same chart as this DAX chart looks. I mean, look at how good. Let's just do a year-to-date comparison. If we take a look, let's say on January 1st, you bought the DAX, or the first trading day, you're up almost 14.5%. That's a pretty incredible move. You compare that to the S&P 500, and you are up, let's see, what are you up? Let's say you bought right on the first day, you're up 3.75%. Still a good return, don't get me wrong, but it certainly is not any, 14.5%. And maybe the theory here is that conflict in Eastern Europe, making progress in any way, if there is negotiations that proceed in a positive way, that could maybe mean, stocks in Europe may actually have a good run. It's actually been really cool to see a lot of foreign stock markets to the US have actually picked up the pace this year big time. Take a look, for example, at China. Take a look at Japan. Well, maybe not Japan, ignore Japan. German 40, right? The DAX looking great. Well, here's Brazil. Brazil, very exceptional breakout here. So you've got some other markets globally taking the reins here this year, and it has been a long time coming. I mean, it has been a long, long time since, US stocks have actually underperformed other places. And do I think that US stocks are going to underperform from here the rest of the year? No, I don't. I typically do heavily favor US stocks, as I have for years. I am, of course, American, but it's not just my bias. I mean, the whole kind of world tends to favor US stocks. In fact, a lot of the US stock market's investment is foreign, right? There's a lot of money that comes into the US to buy US companies due to, the high kind of pro-business culture that we have here, innovation, development, growth. A way of comparing German stocks to, or not German, but European stocks to US stocks, is that European stocks are typically more like value centric. It's a lot of banking. It's a lot of kind of stable type businesses. Whereas the US is like Silicon Valley, growth, technology, innovation, which is like the high risk, high reward stuff in the markets. So of course, in the last 2 decades or whatever, where you've had a ton of demand for risk on primarily, of course, the US stock market has greatly, greatly outperformed. In fact, I'll show you that outperformance, and it is remarkable. Let's do S&P 500, and what we'll do is we will compare this. We'll just add onto the screen. We'll compare even the DAX, which is, a strong stock market. But if we take a look, what you can see here, let's go out to a weekly chart. Let's just go back as far as we have data for this. This is going back since 2018. You can see the outperformance is pretty substantial through this period. DAX has actually held up pretty well. We could compare this maybe to like UK 100. Let's just do this, see if that, yeah, you can see, look at the difference there. If you had bought in this same period, I mean, go back as far as here, you can just see the substantial difference in returns. Now, again, I don't necessarily think that UK and DAX and all those and the Nikkei, I'm not saying those things can't also perform, but I would typically take the preference of buying that innovation heavy stuff as long as conditions are still okay. And there is going to be a time, guys, where things change a little bit. That dynamic where growth maybe takes a backseat to value at some point. We've had a really hot run in the stock market. Can I see the chat? I can, but I am very up here right now. Like, we're going through charts and thinking, so I'm very slow on the chart, on the chat. So I'm not ignoring you. I'm just I apologize. I'm just going through my Monday morning routine here of going through a lot of charts. So let's just take a pulse check here of where we are. S&P 500's at all-time highs. There's been some discrepancy here, or some things that I'm not a big fan of with buying these levels for the S&P 500 and the stock market in general. It was because last week, I would kill to have the Edge Finder right now. Is it loading now? Come on. Give us Edge Finder. Nope. Oh, is it back? Google had a server maintenance thing or something this morning. It's probably still coming back to life, but Edge Finder will be with us shortly, I'm sure. But here's the thing. So a lot of the data that came out last week was not super favorable towards like massive upbeat, U.S. economy stuff. So we had like retail sales came in light. JOLTS job openings recently came in light. Not to say that that's all that matters, right? We had CPI that came in hot. That, like, there's some things that are not super perfect for stocks. And I think stocks are priced right now to perform super perfectly. What I mean by that is that earnings expectations are very high. The economy expectations are very high. And granted, I'm a buyer of this market, but there's a time and a place to buy things, even when you're bullish, or if sell things if you're bearish, right? There's a couple questions that I always ask myself, and I talk about this frequently. What do I want to buy? When do I want to buy it? And why do I want to buy stuff, right? So like, or sell stuff if I'm bearish. But when I look at the stock market and I say, okay, why do I not want to buy it here, right? Why? The question why, the answer is, well, we've had a round of kind of disappointing economic data, and the market has still resiliently pushed back to the all-time highs. I mean, that's a really bullish price action signal. But for me, that would keep me on the sidelines and say, look, I'll wait for a dip, because we don't have all the right recipes for me to just be super bullish and pressing the buy button as we cross the all-time highs. I've got to either see one of two scenarios, and I've been a bit of a broken record on this. So if you watch every day, I apologize. You probably will hear me repeat myself frequently. It's trading 101 is a lot of patience and repeating yourself. But so as we hit this all-time high, if we do get a couple weeks of downturn and a pullback here happens, we kind of go range bound for some time, I may be a buyer at this level. Actually, I probably would be, as long as, conditions still look decently good, especially specific areas of the market that I like more than others. What would happen to get us there? Well, inflation was a bit hot. Tariffs, which initially were concerning to the markets, seem to be being shrugged off right now. Trump's commentary on them seems to be a little bit less urgent than previously thought, in the sense that, like, could tariffs still cause growth slowdown or inflation? Absolutely, they could. But it seems like the administration is not like rushing to stamp them into existence right now. That was the fear, right? Right off the bat, a lot of people were very bullish about, pro-business administration, et cetera. And then people got worried about tariffs. And now what's kind of happened recently has been people are kind of more on the side of like, well, look, they're not stamping in 15 different tariffs all at once. Seems like they're negotiating with our neighbors, and there's not like a rush to put out, and there's phone calls that have yet to happen. So again, I think that the big fear around Trump tariffs was they were going to come out of nowhere, give nobody any time to react, and boom, you've got tariffs, and it really disrupts the supply chain, causes big supply issues. And don't get me wrong, they could still have negative effects to the market. Again, I've been trading for a while, and 2018 was really ugly with tariffs. What can happen at any moment with the this time around too is that relations and negotiations can sour. And if that were to happen, do not be surprised if you see a 10+% pullback in the stock market. In fact, we have a blueprint for this in 2018. And arguably, the tariffs that Trump wants to put on this time around are more aggressive. And in 2018, I've gone to this chart many times, we had a 21% pullback in the S&P 500 in a few short months. So my point is, if you're gonna have to watch that stuff closely. in my opinion, if you get it, it's a dip buying opportunity. But we'll have to see how those things go. I think the big one for us to talk about and to watch is China. Now, here's the thing. What's the market telling you about how it feels about tariffs right now? It seems like they are less worried than they previously were. You don't get a Chinese stock market rally like this if people are absolutely petrified of horrible tariffs. So it seems like the market's telling you tariffs may still be coming, but maybe they're not as aggressive or fearful as previously expected. I'm pointing that out. I'm not saying, oh, it's all sunshine and rainbows. I'm pointing that out because that's what the market thinks right now. If something changes, you'll get drastic reversals. So we'll see. I don't try and predict that stuff. Tariffs are, trying to predict what Trump is going to say on the phone to President Xi is you can play that game if you want. I will not be playing that game, right? I don't know what's going to happen with tariffs. Generally speaking, markets are something I want to be long right now, but not at highs. I've got to wait for pullbacks. And if you get that pullback, the risk to reward seems a lot better for me. Let's move on to metals because, of course, I've been really adamant about metals recently. I want to show you guys something I've been using a lot. Well, I've used it for years. It's like the simplest thing you ever saw. It is a really simple momentum indicator that we built. Frank and I built this. Oh gosh, I guess a year and a half ago or something. We just programmed a really simple indicator for TradingView called the A1 momentum indicator. I love this thing because so actually I've got a lot to talk about when it comes to the metals right now. So hopefully you guys are okay with that, but I'm going to spend some time here chatting about metals, gold and silver specifically. So the momentum for metals still looks good. Now, on Friday, you had a bit of a sell-off, right? In fact, an annoying one for me. I talked about on my Sunday video how I was kind of frustrated by what happened on. I don't think I had a lot of really positive responses to my rant about this on my Sunday video. If you saw it, huge move up. I was like, heck yes, that's a really solid breakout for silver. And I mentioned on my Friday video that I would look to potentially even trail stops if we got a closure above this high. Well, what happened? We had a complete reversal and flop. Now, I'm still in profit on my silver position, but this was frustrating mentally. Like, I don't think anybody, you can think of what you want of me, but I was frustrated by this. Like, that is annoying. Well, huge reversal. I was up. My whole account was up, I think, like 2+% at one point on the day on Friday, which I trade really conservatively. So for me, that was a really big day. And for it to reverse and me end up the day flat was really annoying. But here's the thing. I adamantly said in my video on Sunday, and if you don't watch the Sunday videos, they're very raw. They're not edited at all. Honestly, the videos that are edited are much better because then you can see all the chapters and there's music but sometimes on my videos on Sunday, I just spend time ranting and going crazy. But I ranted about this trade on Sunday. And first of all, I just want to say to the many very positive comments, just supporting me in that, I really appreciate that. That goes a long way. As a content creator, as you can imagine, it is difficult to share trades and ideas publicly, and I get teased and made fun of all the time for when trades go poorly. So I really appreciate the positive comments, but that's not what I'm talking about here. What I am talking about here, though, is what do you do in that situation? Because all of you guys have moments too where you have a trade and it goes poorly, and you're like questioning your system or your strategy. Well, I have one really good benefit called experience. I've done this for a long time. And I've done all this stuff 17,000 times before. This happens sometimes. Sometimes you have an idea and the market does this, but I'm not going to freak out and close trades. And I'm certainly not going to build the habit of, oh, I should have just taken profit here. That's not what I do. That's not my system. You have to stick to the system, even if sometimes it means watching profits get given back to the market in exchange for what I know to be long-term, consistently profitable approaches in the market. I have a system. I have a reason for what I do. Respectfully, there are always, comments that people say, oh, you should have closed partials or do that. Respectfully, like I appreciate people watching my videos, but I don't make any of my trading decisions based off of what people comment on my videos. I stick to a system. And so for me right now, if the Edge Finder would open up, it's giving us issues. I was really excited to show you something, but the Google servers are getting updated, or something is happening behind the scenes. So the Edge Finder is currently down. If we had the Edge Finder open, you would see that silver and gold are still getting very bullish readings, right? Very bullish readings plus momentum to the upside means I stay long on these trades that I'm in, and I don't freak out and I don't make any changes just because we had an intraday reversal that admittedly was very annoying. It doesn't change what I do, right? I can't be changing my system every other week, and I haven't changed my system in years. I've stuck to the same old, and that has served me very well over the long term. But over the short term, there's always frustrations. Hope that resonated with somebody out there. We got 500 people watching between everywhere we're streaming. I appreciate you being here with me today. We're going to keep going. I got more charts to look at, but I do want to just ask a quick favor. If you're enjoying the commentary, hit the thumbs up button. And also, I want to make sure that if you have not already joined our free Telegram channel, that you do so right now. We'll drop the link here in the chat to this. The reason I'm saying this is because if you enjoyed that little rant and commentary, I also want to make sure I add some genuine value to your trading experience as often as I possibly can. The best way I can do that with you, obviously, you can come watch the live streams, but many of you guys probably are just here for sometimes, but you don't have all day long to watch me rant about my silver trade. But if you would like, I would encourage you to take a second to join our free Telegram channel between myself and Frank and Julie, who work on this Telegram channel. We're putting out a ton of value. We drop free course material. We drop daily chart markups. We drop macro updates about what's happening in the economy, what's happening globally, geopolitically. We do our best to keep you guys informed on what's happening in the markets. So please do me a favor, take a second, make sure you're subscribed to our free Telegram channel, where we'll keep you up to date with what we're looking at, in case you can't spend, like I said, all the time watching Trader Nick rant about a silver trade that is still in profit. Like it's just annoying when you have those moments. So you're not alone if you've ever been frustrated in that situation, but you are also, those are the moments where the market tests you, where you're like, oh man, I mentioned in my Sunday video, and in this moment, I thought to myself, maybe I should take profit. And I stopped and I said, Nick, I talked to myself, right? You have to coach yourself in this stuff a little bit. You don't make trading decisions like that. Like that's not what has gotten me to the point where I'm in, where the account that I trade publicly is up 200% since 2020. Now I know that's not the craziest returns you've ever heard. I know there's people on social media, they're like, I'm up 1,000% or 500%, but for me, that's really good returns that I'm really proud of. But I didn't get there taking profits quickly because I was afraid of a reversal. There's a possibility that this trade completely flops and I take a loss on it. I would rather that happen than me to start breaking my rules and habits and start making silly trading mistakes. Because yeah, let's say I take profits right there and I feel like a winner in that moment for short-term excitement. I'm like, yes, I locked in a profit. But long-term, what does that do to your trading results? For me, it would hurt them. My majority of my gains have come from significant outsized outlier moves that I've been able to hold on tight to. So let's also say that silver rips for the next few weeks. Let's say something like this happens and I'm just holding on and trailing my stop loss. Is it likely to happen? No. Very small numbers of my trades work out that well. But when they do, it pays for a lot of the struggle in between. So that's what I do. I look for big trends. I look for explosive moves, and I trail stops. I trade for that 1 in 100 trade that goes crazy, and that is not for everybody. Nick, do you go to the gym? I do. I go to the gym because I have a gym in my home. It is a very simple setup. I only have dumbbells and a bench right now. Actually, no, I take that back. I have dumbbells, a bench, and I have an elliptical. My parents also gave me an elliptical, so I have two ellipticals. They gave me an elliptical that they didn't want in their basement anymore. So I do go to the gym. And just on the note of trading here today, I do think that every trader should do some sort of, whether it's gym or bike or hike or walk, some sort of physical activity is really good for trading because, of course, trading is a sit down sport, right? You're just on your computer. So it's really important that you clear your head and get away from it as well. Nick, I'm addicted to this channel. How can I stop watching? Well, I heard that if you spend all day long watching me, that you're significantly more likely to spend the next day all day watching me as well. I mean, I appreciate you watching. I do want to make this point as a content creator. I think it's really important to mention. Look, trading, becoming a profitable trader is not the same thing as watching YouTube videos about trading. So I would encourage you. I'm very thankful to have an audience, but get out there and do the stuff, right? Watching me talk about trading is not the same as you becoming a better trader. So, of course, I'm a content creator. I'm not going to encourage you to shut off my YouTube channel. But what I would encourage you to do is make sure that after you spend time watching my videos, take it away and go back test, go demo trade, go research and study things, right? Actually put some pen to paper for proverbially in your trading, right? And actually get out there and study stuff because there's only so much you can do or only so much you can actually learn from listening about trading or watching things about trading. You have to gain experience to become a profitable trader. There is no substitute for that. No one can coach you or teach you to be a profitable trader by itself. That can certainly help, but you becoming a profitable trader only happens when you become a profitable trader through blood, sweat, and tears. And I do mean not blood, but sweat and tears, certainly. I don't think I've actually ever cried about a trade, but there's nothing wrong with that. I think a lot of people, I mean, the silver trade on Friday, certainly, but I'm just not, I'm not a crier. I'm like, I get mad, right? I don't get sad. I usually get mad. When I get mad, what I do is I start punching my monitor until it screams, and then I stop. Just kidding. But silver, gold, slightly in the green today. Stock's flat. Remember, it is, like I said earlier, it's a U.S. Bank holiday for the stock market. So the stock market's not opening up today. So you're probably getting a little bit lighter volume. Hey, the yen pairs moving here. I shorted Swiss yen. It's been a couple of days now in profit on that position. Curious to see if we can get some follow through to the downside. This has been a currency trade I've been watching for a minute. So we'll see if we can get some follow through. I am also willing, if we do get a push higher for Swiss yen, to add some short positions at these levels. I have a dollar cost averaging approach that I'm looking to use on Swiss yen. I like the downside. I like it long-term to the downside, and willing to work with the position with small size at each level here, as long as I continue to see a bear case for this currency pair. Dollar index here, big beat down the other day, or last few days. Here's your daily chart. Big drop on Thursday, follow through on Friday. We'll see how this candle closes here today, but momentum seems to be shifting to the bears. In fact, I've actually got to mark this as a supply level now, right? So if you actually get a bounce here, my first reaction would be from a technical basis, we may see more downside for the dollar index. A lot of weaker than expected data. Okay, we've got Ivan joining here on the call here in just a moment. Let me just also remind you, I just mentioned it a second ago, if you're not in our free Telegram channel, please take a second. We're going to roll a quick break to thank our sponsors. While that happens, please also make sure that you've joined our free Telegram channel. We are dropping bonus clips in there. We're dropping free course material, and we're dropping daily chart markups and ideas. Take a second, if you have not already, to make sure that you are subscribed to the A1 Trading free to join Telegram channel. We'll be right back with Ivan just after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, we're back with Ivan. Hey, Ivan, how are you doing,
man? Good.
Happy Monday to you. U.S. markets are closed here today. Well, U.S. stock markets, futures market, Forex markets still open up. I'm curious. This week, we have meeting minutes. Last week, we had a ton of inflation data, and we had all sorts of reactions. But one of the ones that I wanted to get to and discuss with you was this breakdown of the dollar. We were just chatting about it just before you hopped on. What are your thoughts on the dollar index? Has this flipped? I mean, you and I, Ivan, actually, I can count on our hands how many times through the duration of our streaming we've actually truly flipped bullish, then bearish, then bullish and bearish on the dollar index. Is now the time to go back to dollar bearishness? I mean, we've been dollar bullish for some time. At least I have been. I know you and I have chat about this. Is it time to bail on the dollar bullish trend, or is it too early to call?
Both me and you know very well we don't look at charts before we make our decisions.
Mm-hmm.
So, what is the reason why dollar is falling? Is it structural? Is it systematic? Or is it short term? Is it just something in the wind? And I would argue it's something just in the wind. It's that Trump might get a deal with Russia, except to Europe, to get peace in Ukraine. While Russia probably is going to eat the whole of Ukraine. That's probably going to be the case. But that's why dollar's falling. There's going to be apparently maybe no more war in Europe, or maybe a third world war, because Europe is gonna help send troops to Ukraine. Then if Russia attacks Ukraine anymore, it's going to be an Article 5.
Well, here's a question for you, Ivan, because look at this. This is the hottest chart I've got on my screen right now is the DAX. The DAX is absolutely ripping here. And from what I can find, it seems that most traders are attributing this big run up to the Russia-Ukraine stuff potentially coming to a close. Of course, we always make the point that regardless of your political views, regardless of what your thoughts are on how it happens, it would be a good thing from a humanitarian standpoint to see simply innocent people left out of government wars and stuff. So if that does happen, the DAX potentially stands to gain a lot. My question to you then would be, does the euro gain some strength in that situation or not? Like, if let's say that in the next, let's think about where things potentially are going. If there is resolution, what does that mean for the euro? What does it mean for Europe as a region?
This is now asking geopolitical experts, and yes, we are very much. If we hypothetically were to target for the month, and if we hypothetically, after today's meeting with the state heads in Europe, in Paris, with Emmanuel Macron, if they would agree to support Ukraine, this is going to have a very sharp fall, because that's not good for Europe. And as much as you want to say, okay, as much as we can say, yeah, this is good for euro. Euro has risen last week. This is good for the stocks. Yes, it has, but it's only on the fact of might be a possible peace. But if Europe, as what we are, I don't know if he's seeing probably some contour of, might step in militarily, which I haven't done before, That's an escalation of the war. That's a 180-degree move, and that will not. Then we will go back to, or was it 2020, 2022 on the DAX, and I don't think that is very positive. Around that time where Russia went into Ukraine, we had about 20% loss on the stock market.
Yeah, I mean, certainly, like war is disproportionately like harder on Europe since it's right in their backyard, right? You've got Ukraine right there, as opposed to the States, which are farther away from that situation. So that proximity definitely seems to be both hurting when the war was kind of breaking out, and if there is rumors of positive developments in any way, it seems like the DAX is, of course, benefiting from that. And you mentioned, yeah, the euro saw a little bit of a bump off of this as well. So if we take a look at euro, you can see we're off of the lows, but it's not a super impressive. It's not a super impressive breakout. I would say that the euro still looks troubled unless you start to really break out of some of these key resistance points. Do you have any trades in the euro specifically? Are you looking to short it? What are your thoughts?
Okay, maybe I need to educate a bit more. Europe nations want to put troops in Ukraine.
Mm-hmm.
That is war.
Mm-hmm.
That is not just proximity. That is actual. That's what they're discussing today.
Interesting. Yeah, I mean,
so that is an escalation of what they've done before. Just given them, what do you call them? And just give them, they're just giving them materials, ammunitions. Now they want to have humans on the ground. So
that is okay. So now you've got kind of two stories there. So you've got the Trump and Putin sending each other love letters, and then you've got, of course, the potential actual mobilization, if you will, to use a vocab word, of troops and things like that. So yeah, I mean, it's an interesting time. I don't know. We talk about this stuff, Ivan, but of course, the difficulty of using it in your trading is very hard, right? Like trying to actually put together trades based off of it. I don't do that. I don't think you do that either, right? So like, what if we put that to the side for a second, what are you thinking on the euro?
So that is a huge risk to my trade, but I want to short euro dollar. I just need a reversal. Royal Trade says Europe will not get any army in Ukraine. That's what they're discussing today. That's what the news is saying. That's not my words. Second of all, we don't have a reversal yet on euro. So if that comes to light, that we have escalation in the war, 180-degree compared to what has happened last week, then yeah, I think that's going to have a very good push lower, and then I can trade. But right now, I am not able to whatsoever trade euro dollar short. So I'm just waiting.
Sure.
Like you're waiting for your silver to go higher.
Yes, I'm begging and crying and hoping that silver goes higher. What else, Ivan? What other trades? Are there other currencies that you like more? What are your thoughts on the yen? Or actually, what is your chart of the day? If we had to ask you your chart of the day, what's your favorite one?
I don't think it's going to have a boost. Oh, sorry, I don't think it's going to fall. But you have not mentioned yet, so I can inform that tomorrow there is going to be an RBA meeting, and I think it's on Wednesday. It's going to be a RBNZ, so it's Reserve Bank of New Zealand monetary policy meeting. So there's two, what is it, E-specific trades, potentially. If they come out and say, well, we're going to cut more, there's a 50-50 chance of New Zealand cutting double tomorrow, or on Wednesday, sorry. So those are kind of like, if they drop, if the Reserve Bank of New Zealand comes out bearish or more dovish than we previously thought, that'd be great.
Yeah, I mean, that's the thing, is a lot of central banks are cutting rates. So here's a question for you then. Do you trade the yen against the Kiwi or the Australian, or do you really specifically like the dollar over it?
I really disagree with the yen, with the dollar weakness at the moment.
Okay.
I got smoked, but No, also I think it can take. I've seen charts that it can take up to 2 to 3 weeks before dollar goes bullish again after a higher inflation number, which happened about in 2022. So I'm still hopeful that we are going to go lower, but on the yen, I don't know, Mike. Like, this isn't bearish. Dollar yen is bearish. But that train was like Thursday last week, right? That was when we had the inflation number on Wednesday, or PPI probably, and then it went higher, and I'm like, okay, cool, this is not going to go lower anymore. And then it went lower. So that kind of entry is supposed to be around here. That never happened. So I'm supposed to short there. So I'm not in there.
Yeah, I mean, man, yen has been something to watch, and I'm frustratingly waiting for the Edge Finder comeback. I'm so desperately wanting to show off this new thing. If you haven't seen it, Ivan, we got Japanese economic heat map in the Edge Finder. This was, we should, you know what we should call this? We should just call this the Ivan yen heat map, because you're the yen man, and we know you love the Japanese yen. It's still loading, and we had this issue this morning. Google's Looker Studio was down, which is what the software is built on. But it's coming back, and it is being really, really slow. But I'm desperately trying to show this because this is the one that's not loading, and it's the one I want to show you. Inflation and PPI, right? The CPI and PPI for Japan came in hotter than expected. That would make these things red to your request, because you know we listen to you, Ivan. Your ingenuity is important to us. But you mentioned that inflation came in hotter than expected. So these will come in red and red. And what that does is it shows you that the Bank of Japan has most of the remedies here. They have strong PMIs. We have strong retail sales, strong GDP growth compared to forecast, all the recipe for Japan to keep hiking rates, and for other countries, as you've just highlighted for us with the RBA and RBNZ, rate cuts. And you know, that dynamic, I just wonder if maybe this is the year of the yen finally coming back a little bit. I'm not fully convinced, because again, we've got a Fed on hold, and I think that until the Fed cracks towards really cutting rates again, I think that the dollar kind of holds a placeholder. But I don't know. What are your thoughts on the yen? Do you think the yen has potential to move higher against the dollar? I suppose that would mean dollar yen moving lower. What are your thoughts here?
I'm really struggling with it because you have that, and then you have the was it 48.6 thousand trillion yen they spent a month or something on bonds. So 48,600 trillion. So whatever that means. So that's supposed to be weakness for yen. And then the higher interest rates expectations makes it stronger. So I'm brain twisted. So I have said I'm yen strong. I don't know if I'm dollar yen weak, also shorting the dollar against the yen. Because what do you mean when you say that Powell is neutral? But after that, we had CPI and PPI. Shouldn't that make you bullish? Because we went up to 3%.
Well, yes and no. You had we have to think about this again. I'm just going to do this without the Edge Finder, but it kills me to not be able to pull up the heat map. We had some stuff that slipped last week. You know, we had retail sales came in light, JOLTS job openings light. We kind of have to think about, and for me with the dollar, I'm thinking about where we were a few weeks ago. We did also have hot inflation data from the previous round, and we had retail sales hot, we had JOLTS strong, we had everything strong. Now we're shifted a little bit. Yes, we still have hot inflation, but we've lost some of the other story. We've lost some of the JOLTS jobs and things like that. to me, I also think that the story is difficult right now because of what we discussed earlier with the tariffs, right? We just don't know where that's going. And tariff de-escalation is bearish for the dollar, as the market's been telling us, and tariff escalation fears are clearly bullish for the dollar. So I don't really know where we go with that. I think that the market right now has priced in like good news for tariffs. Like they're now starting to think like, oh, they're not going to be that serious or that. So I do worry that from a dollar bullish perspective, that tariffs could come out of left field again and start presenting some issues. In 2018, I discussed this earlier in the stream. It was kind of the same story. Like people kind of shrugged off trade war stuff, like it was going okay, and then all of a sudden relations with China really worsened, and it caused a meltdown in stocks. And so we have to be aware that like relations on the tariff stuff are still forming. It's too early to call like, oh, tariffs are okay or tariffs are bad. Like it's a difficult story to try and predict. So that's where dollars is difficult for me. I wouldn't say I'm bearish on the dollar. I just also wouldn't say that I'm as bullish as I was over here, where you had higher highs, higher lows, and all the data kind of lining up. But, inflation expectations are still elevated. When we take a look at like the 10-year, right? We haven't like really crashed on this. If starts really taking out the lows, then dollar index is probably going to struggle a little bit, because this would indicate that the Fed might actually start cutting rates. But there's so much tariff noise in here; it makes it hard to really try and forecast, Ivan.
Okay, so how you talked about mentorship a bit earlier. So how do you get to the core? How do you get to the real core of the? I'm on the wrong screen. Sorry. How do you get to the core of everything? I always say to whoever wants to listen to me is CPI, PPI, and CPI, PPI, and PCE is always going to be the most important. So consumer price core went up to 3.3, up from 3.2. We went up to 3 from 2.9 on the CPI. We went from 3.5 to 3.6, corrugated to 3.7, so went down, but still it's higher. And from 3.3 to 3.5 on the PPI. And then PC is about to come out, but it's currently at, it's about 2.6. So PPI and CPI came out for this month higher than expected, or in a higher region. That for me alone is enough to stand strong. Now, I haven't remember what the services PMI is on top of my head, but
PPI I think is 3.5.
Okay, so service PMI came out quite weaker, but still above. So I still talk about a dollar bullish case as if I'm totally convinced with my entire body, and there's no doubt with that story, because I've done that before, not necessarily done before, but back in 2022 when we broke the 3 level. Not that that's a bad thing, but that's, for me, it's a kicker. Like, you can't cut interest rate in a 3% environment while you're having an interest rate about 4% for 25 or so. So for me, higher inflation, mixed and pause, I would argue that we should not price in any rate cuts this year. That's beyond or on top of or beside of the trade war. And if we add that on top as well, maybe we see 4% inflation this year. Just saying.
Yeah, I think that's a fair point. And I think that's why it's for me, it's difficult to really get on the, oh, I'm super dollar bearish themed either, because again, you've got that kind of backdrop of uncertainty with tariffs. And so, yeah, I mean, it's difficult. I think that I like the yen. I've got a short on Swiss yen. That's a trade that I like right now. But dollar crosses, I'm very neutral and just kind of sitting back and waiting on that. So we'll see. Ivan, what do you think about indices? High inflation, does that scare you at all for indices? When we look at S&P, NASDAQ, Dow Jones, etc.
Where were we last time? What is the last time? It was 10th or so. So I talked with you about 10th of February, right? So it's about there on the chart. Okay. What happened since then? We have had a drop. We had inflation, could be a bit higher, but then S&P went higher. Is that in line with what I said? You asked me last time, shouldn't inflation make everything fall because that just makes higher financing costs? And I said, no, not short term until we rise interest rates. So short term, I've been right about that. But it's about, because you have also talked about sometimes before I'm using your words against you, ha 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 ha. You have said what is the data? What does the data tell you? So the data tells us that we have high inflation, at least in my words, and we have not seen Powell coming out yet and say they're going to increase their interest rates. And until then, because that's what's evidently going to make businesses fear, is the actual higher interest rate. Higher inflation is just higher profits. Woohoo! Because they're the ones that have taken out the higher profits, so taken out the higher cost into higher prices. So for them, so far, it's a win-win until Powell changes his stand.
Sure. Yeah, and I think the other thing to it as well is that inflation. Let's go back to that Wednesday. Yeah, so check this out. So this is 10-year yield. Here's that inflation number came out, and then we drifted back down, largely on inflation expectations being a little light for the future because maybe tariffs are going to roll out slower. Like that's where it's difficult. Like the inflation data itself was definitely very strong for the dollar, but then there's this complicating part of like, well, if tariffs happen, maybe they're happening slowly and that's less inflationary for the market. I think the big inflationary concern is like if you just stamp a bunch of tariffs everywhere all at once, suddenly then the supply issues that could come out of that could cause inflation to be more aggressive. Whereas if you have time to prepare for those changes, and negotiations take place and it's months away rather than weeks away, perhaps it could be a little less disruptive and businesses could be prepared better. But I don't know. That's the difficulty with the whole tariff story. So I still think that for me, dollar index remains a little neutral until we get a better picture. Same thing with stocks. I mean, when I look at the S&P 500 at all-time highs, I still love the story for companies which are performing very well. Earnings season was really strong for stocks in the US, but we have elevated inflation. Tariffs are a big question mark. Like they could worsen at any moment and become a problem for the market. And we could very quickly see 5-10% drop in the market. So I think for me with indices, I just kind of have been persistently waiting patiently for either a bigger drop or more clarity on the situation, in which case I'd look to buy pullbacks and maybe just continue the rally. But that's where I'm at with it. So we'll see what happens.
Okay. But have you waited until your beard became white or gray by waiting for a pullback or waiting for the stock market to do what you want to do?
Well, the thing about waiting, the thing about waiting, and this is the pro and con of everything, is like I might wait and then I might get burned in sense of like we just do this and then we just completely run away. It totally could happen. But I think for me, at the end of the day, I'd rather wait for the right setup, take it when it's there, and build that good habit, rather than chase with uncertainty just because I'm afraid of missing the move. Because what happens if I chase here and we do get that 5-10% pullback in the market? I think for me, it's just like, you got to stick to the rules, got to stick to the strategy. I don't have a systematic reason right now to be buying into indices. So I'll just wait. And if that means I miss a move, then it is what it is. What about you, Ivan? How do you approach this? Are you looking to trade on this at all, or what would you look for?
I have tried to dip my toes somewhere, and I remember, and I might have been like somewhere here or something, and then I got stopped like that. That has kind of been my luck this year so far. When I tried to trade it, or probably like that. So hit most of those anyways, and then it went higher. My problem, and what you kind of have to also agree with yourself, is hindsight is very easy.
Sure.
Here it looks great. It looks like a great pullback, right? Look like, oh, it's all my rules that it should fit perfectly. But for some reason, market has a tendency to like say, hey, you got a stop loss there. Oh, we're very sorry, but that's invalid. That's not a good place. And I almost will go back to, okay, what I learned from that is, okay, I should have probably bought down there, but that actually doesn't fit my strategy anymore.
Hmm.
I used to do that, but those are the levels that you also need to test, because generally what happens when I buy there is that it generally does. Sorry, it generally does. It generally does that. It breaks and makes many more lower lows. So it's about being aggressive and patient. It's about being not being too aggressive, not being too little aggressive. But for me, I've tried, haven't been as successful as you have been, but just keep waiting for my setup. And this range, I don't like range.
Yeah. No, I mean that's the difficulty, and then when you look at indices with this kind of recent performance, you're like, oh, well, I might as well just trade this without a stop, and then it's better off that way. And then the second you do that, you get one of the 2022 environments, which were a stop loss would have been your best friend had you stopped out of an idea. But that's why trading is hard, right? You get everything is hindsight is so dangerous for a trader. So yeah, I mean, for me, like I said, I've had those same types of trades as you, where I get into a trade and I get whipped out of the trade with a stop, and then it rips without me. And then also where I have sat on the sidelines here and said, I'm going to wait for a pullback, and then there is none. And then it just goes like this, and we miss the move. So, the thing is, for everybody listening, you're never going to catch the market perfectly. And the second you kind of accept that, the better off you're going to be, because otherwise you'll be endlessly frustrated. Whereas if you just kind of say, look, either I wait for my pullback, I evaluate and make sure that, fundamentally I like the trade still, and I get long at a level like this. I'm speaking for my own, personal way of trading. I'm not telling you what to do. Or you get a breakout, right? You get a breakout, a pullback, continuation. Like, these are trades that I can take and feel good about taking them. But if I take a trade because I'm afraid of missing out, or, like the second I start making those mistakes, it's just a spiral.
Yeah, also, it's very slippery road. Very quickly, and the moment you start second guessing yourself and second guessing your strategy and second guessing your entry, because even though it's human, I always say you should be, professional, objective, and realistic, and all that. What does it actually mean? It means that when you have done your research, this is gold, by the way. When you've done your research and you think, okay, I just buy the higher highs and higher lows, right? Great. Only to note that those higher highs and higher lows can also turn into ranges. And when that comes into reality and you end up now going into a range even before it happened, you're like, oh, I knew that. I knew that would happen. I shouldn't have taken that trade, but I knew. That's when you know that you're supposed to be being in your, I would say, 70 percentile, 80 percentile. Not all trades, but most of your trades, also most of the market move, you should be able to get, but you will never get 100% all the time, because you never know what the high or what the peak is and the top when the bottom is. Silver.
Right. Yeah. I mean, that's the thing. That's the difficulty of trading. You never know with certainty what's going to happen. And all you can do is show up, take your system, for what it's worth. And sometimes it works, sometimes it doesn't. There's nothing perfect. So, Ivan, that's all the time we've got. We got to kick you off because we got our next show host coming in. So, you got to get out of here. So sorry, but we no longer want you. I'm just kidding. We love Ivan. We love having you on. And I just want to mention to everybody watching, if you have not already, make sure to go subscribe to Ivan on YouTube. He has his own channel. You can find more value there. And you can also reach out to him if you're interested in one-on-one coaching. That is something that he offers. You can also find him in our Discord server. If you're a member of our Discord room, you can send him a direct message, ask him about coaching that he offers, and get some value with him there. Ivan, thank you very much for coming on, man.
Thank you very much for having me.
All right. See ya. Okay, guys, up next, Chris Pulver. I'm going to say hey to him just after this quick break. Before we do that, let me just mention, if you are not already using the Edge Finder, it is officially back. You can currently apply for a 30-day trial. If that is something that you're interested in getting more information about, we'll drop the link here in the chat. I did mention this earlier, but gold and silver are getting bullish readings on the Edge Finder. I really like that confirmation. I'm going to stay long unless momentum breaks, but I just wanted to encourage anybody who would like to try out our software. Click the link here. You can apply for a 30-day trial using that link. Fill out the application. It takes just a minute or so, and we'll reach out to you with some information about how you can set that up. Okay, guys, quick break, and then up next, I'll be joined by Chris Pulver here to talk little markets.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
All right. Hey, Chris, how's it going, man?
What's up, Nick? Happy President's Day.
Yeah, you as well. Question for you, Chris. Well, we haven't spoken in a while, so I want to get your thoughts on a few things. I figured I would chat with you about it. First of all, stock market's back to the all-time highs. How do you feel about this? Are you, we had some hot inflation data. I listened in to some of your segments last week. You were talking about the 10-year yield, how that could be a threat to markets if we take out those highs. And to follow up on that question, if you're not so interested in indices, which I'm kind of going to assume, if you're not, what are you looking at?
Well, I am interested in indices because I think that's the low volatility play this year, is to generate the income on the indexes. I wish the Russell was set up a little bit better than what it is, but the Dow is, sitting here with this like last little bit. Maybe this is another kind of coiling towards another blow off top. My concern is just the sheer bar count that we have on the Dow and the S&P, and the move away. So have a look at the DIA. Last time we hit the 200 moving average on the daily was 320 bars ago.
Wow.
Last time we had the market also this high away of about 9.7%, almost 10%, was the previous all-time high. I don't think it was an accident that we came back down. So I could see this type of setup happening. Timing-wise is going to be the most difficult, but let's say the Dow runs up to the highs and pokes the highs and then falls just a range. I don't know. This is the thing. I don't know what causes that. What causes that? I have no idea, right? The S&P, same thing. The S&P has not hit this daily charts 200 moving average since November of 2023. Again, another 300 plus bars. We're sitting around 322 bars, very similar to the Dow. It's kind of the same thing. I mean, the last time we had a big stretch away move, this was pretty notable. When we had the July to August sell-off, we were up around 10 to 11% above the 200 moving average, and we end up having that, really nasty fall over that like 30-day window. Similar to what we're staring at right now, we've had another 9 to 10%, and we started to correct. Now, we have seen the 200 moving average has come up just based on price alone, and price hasn't really gone down nor up. And so the 200 moving average, as it is dynamic and gets closer to price, we are getting a lesser distance away, but the bar count grows. So I'm not saying that I am bearish. I just think that either this has a fake out to the upside and we come back down into this range, or we have a slight move to the upside where it's going to be a bit of a broadening top.
Yep.
So you see what I'm saying? Like we could come up here towards like 620 or so, and then maybe pull back in with this previous resistance becoming support. It's hard for me to judge. It's hard for me to think we're going to have sustainable blow off tops.
I think that's what, when I set you up that way, I wasn't saying that, I know you're bearish. What I meant more was, I think we're in the same camp of just saying, look, markets don't move up forever, and we've corrected sideways a bit for a ways, as you just mentioned, with the dynamic kind of nature of the moving average kind of bridging the gap slowly. So we're correcting sideways a little bit. I guess you could make the argument. That is one of my favorite expressions. I think it's kind of hilarious, correcting sideways. Like we're just kind of staying in place.
Sure.
We're running in place and giving the market some time to just kind of digest. But what I also kind of was hinting at too is that, you mentioned the Dow Jones. You also, I know, are big on gold and silver and Bitcoin. You're more diversified, and I think that diversification here is also a stance, right? It's not necessarily bearish, but it's saying, look, we've had some runs here, and Chris, sometimes we sound like broken records saying that. We've gone sideways. The market's waiting to really pull back, but it will happen. As you mentioned, that August move was violent and quick, and if you were prepared, I know you and I discussed, we both made some mistakes during that time, but came out okay, right? So so that's what I think is interesting here. You have some stuff that's happening under the hood worth talking about that I want to ask you about. Foreign stocks doing quite well. You've got the DAX running crazy. You've got Chinese stocks. Oh my gosh, I know you're a Chinese stock bull. I wish I kept more of my positioning in that because it's looking incredible. And you've got gold running away with it. So I'm curious your thoughts on there. What excites you outside of stock indices right now?
I mean, the fact that we've had pretty much all other countries outperforming the U.S. to start out 2025 has been an interesting month and a half.
Yeah.
The Chinese stocks have been outperforming, index is outperforming. I think China is coming back in a pretty big way. This week we have Alibaba and Baidu earnings, so we'll see if there is justification. But again, you look at a stock that makes a move like this, it's hard to think like this is the new normal.
Yeah.
I mean, any stock that is this type of rate of change this aggressively, we're probably going to deal with a lot more volatility ahead. But I'm trying not to cap my upside too severely. Like Alibaba, I've got positions here at 85 and 99, got a bunch of option trades and ratio spreads. Baidu, this one I ended up might getting called away, unfortunately, because I was able to roll this up to like 105 and 110. But if we have a similar rate of change on Baidu, where we get back to these highs from September, there's probably not a way that I can bump this up to like 116 without like chasing behind it or going out so like obnoxiously far out on the expiration calendar. It probably won't be worth it. So I might just take another small dollar cost average position when the market opens up on Tuesday, buy a little bit more Baidu. I understand there's earnings though. I mean, that's the one thing I would have to take in stride is if earnings is a positive thing, then we probably have another run right up towards the 116 handle. What I might be willing to do is just throw on another credit spread, and if it goes up, it goes up. Generate the income there. Obviously, I make a lot more money if I just bought more shares. But I mean, I guess it's a good problem to have. Like, oh boy, my stock got called away, boo-hoo. But it's I've owned the thing with a break even in the low 80s. So I mean, to go up into the 105, 110 handle, that's still getting it called away for a good chunk of profit. So that is Baidu. I mean, Germany has been insane.
Yeah.
I mean, outperforming like dramatically. I think from the start of the year, this thing's up like 13 to 15%.
I think it's 14 and a half. We
is it really?
calculated
Yeah, okay.
somewhere around there, 14. So
Okay, so when we started trading in January, you've got month plus right here. There's your open. Yeah, 14. It's like we've got the S&P up 4%. So couple of things. I mean, we talked about this quite a bit as we wrapped up last year. Like, what's going to be the big prediction for 2025? We had said either one, this kind of U.S. exceptionalism is going to be hard to continue and sustain. So it's not a huge surprise that other countries that look a little bit more attractive are seeing more inflows. And on top of that, I do think what's happening with U.S. policy right now is forcing money to go into what's likely going to cause other countries to take fiscal policy action. Look at what happened to the U.S. the last 4 years. Everyone's talking about the Fed's more restrictive, and the Fed went from like this crazy aggressive rate hike policy to then, obviously everyone's, hating on the Fed for what they did last year by cutting rates 100 basis points. But at the same time, what's been the common underlier for the U.S. has been fiscal spending. And it almost looks like right now money is going towards the countries that would benefit from fiscal spending. And it's happening more in Europe. It's happening more in China. Japan's been the only one that's been crap. Like Japan's sideways, right?
Yep.
And I don't know what that means necessarily. I still think the dollar is an interesting play for this year. Let's go to a smaller time frame, but I mean the monthly. I still think the dollar has a pretty strong support level around this 106 to 105 handle. If this is it though, like if this dollar does not hold at 105 and this thing comes all the way back down, I could see the stock market, Nick, going to all-time highs with some momentum. Like, my big concern for 2025 was that the dollar gets stronger and the 10-year yields rally, and they go kind of hand in hand. That's going to put a chokehold on growth. And yet, if the dollar gets weaker and the 10-year yield goes with it, I can see the market is looking at like there's more money to be made in equities because all of a sudden yields are down, bonds are up. Like the appreciation of bond prices is one thing, but the yields going down just makes like fixed income a little bit less attractive.
Yep. No, that makes sense. It can reverse course, right? That relative attractiveness of bonds can erode away if you get the weakness in the dollar. Yeah, no, dollar's been interesting. I mean, you've had a little bit of a crack in momentum, I suppose, from the recent kind of undefeated uptrend. It's a different price action chart than it was, a few weeks ago. So we'll see. I mean, there's a lot of beneficiaries if you do get a weaker dollar. Bringing me to metals. Gold's been running up like crazy. This has been a really strong move so far this year. I mean, this too, yet again, everybody kind of forgets about gold. It's up, it's not up as much as the stock market, down 3.8%. But at one point here, let me see if I'm getting this right. At one point you were up about 5. So I don't know, silver and gold. Do you think they have a lot of upside this year, or do you think, they'll have more of a consolidation type or even down year?
I don't know. I think that the simple thing is, look, I've got bar counts on the S&P, bar counts on the Dow, bar counts on gold. I think you can't get too excited when we've had a bar count that starts here, still goes, it's 300 plus bars. And also this last little run since we blew through these highs, this is up like 14%. That little stretch from December to now is up like 14%. Once we blew the highs off, I just think that 3,000 could be the psychological number. Maybe it struggles to get there. Maybe it pulls back before it gets there. But there's something about a consolidation window, I think, based on the time of this. Either we consolidate before, I don't know, either we keep moving to hit a psychological number and then we have like a nasty snapback, or we consolidate and pull back to find some type of dynamic support before we head up. And again, I would be shocked to go another like 50 to 100 days without finding this 200 moving average. And that's what I think about a lot of stocks. I mean, if there's stocks that have bar counts of 300, 400 plus bars, I don't think that stock has a ton of directional play without finding some dynamic support. Like I said, the only thing I'm missing is like the why. Like, why would it pull back? Why would the SPY pull back and find the 200 moving average? Why would gold pull back and find the 200 moving average? Why would Meta? I mean, Meta has had another crazy high bar count. This one, it goes even further. This one is another one that is now 500 bars away. And if you remember not too long ago last year on NDVA, the other stock that nobody trades, NVIDIA, that I looked at this bar count and I said, we're probably going to find a 200 moving average. And I said that once we hit this high and retested it, I was like, look, we've still gone 400 plus bars. I thought as we made this high, I kind of made a statement like, we're probably going to see the 200 moving average before we hit all-time highs. And we faked out like to the exact point of that all-time high, and then we dropped and had DeepSeek news and everything else. But ultimately, we did have a why. Call it DeepSeek, but this technically did what I expected, which was we were 400 plus bars overextended in a way and kind of imbalanced, and yet price pretty much stayed within that range, found the 200, and that was a perfect spot to buy it. I mean, if anybody was even paying attention to NVIDIA, buying this thing at 120, 119, 118, whatever price you can get, you love that trade. When this thing came down to the 200, I did ratio spreads, I sold puts, I bought some shares, and I also did some debit spreads, and I'm closing profit on a lot of those right now. So,
I did the same thing, Chris. I mean, I did a little simpler for more options, beginner friendly style, but I sold a whole bunch. I sold 2 different puts, 2 different levels, closed one of them out, and I've got one still running that I'm looking to close. I've got shares that I own and covered calls. I got fancy with Nvidia. That's pretty fancy
So
for
did
me.
you. Yeah.
Yeah, covered
Sound
calls,
fancy.
naked puts at the same time. So, no, I like the thesis there, right? When you get this really long stretch, whether it be stocks, gold, doesn't matter. Just keep it so silly simple,
Yep.
and just think like when something has run really hot for a very, very, very long time, it doesn't take much to kind of disrupt that, and very quickly a return to normalcy. I mean, we saw that big August 5th sell off, and no, it didn't turn into, a stock market crash, but look how quickly it reversed down. This was, I think it was a 16 or 17% move on the NASDAQ in just a few weeks. So
Right.
I agree. Like the concept of like trying to, I know what's going to cause the NASDAQ to drop again like that. I'm not going to try and claim I know that. Could be a number of things. Could be
Sure.
tariff negotiations sour. It could be inflation someday. Like we maybe I could see the market doing what it did with DeepSeek, where DeepSeek came out in on Christmas Day, I believe, and it took a couple weeks before the market panicked about it. Like I think inflation could do something similar. Like inflation's in the threes. Oh, who cares? And then one day everybody's like, inflation's in the threes. That's the way
Right.
markets work. They can be very erratic and sometimes just switch their attention drastically. So I would not be surprised if something comes out with the Fed. That's what we saw that big sell off when we were on stream together, Chris. It was like the Fed just signaled a pause, right? They just signaled a pause, and that was enough to get the market to drop in that circumstance by 4% in a day for the NASDAQ. Proceeded to go peak to trough, a 7% pullback. Nothing huge, but for the NASDAQ, that's something. So I think that being patient here this year is wise, because in the last 2 years, Chris, here's something I think a lot of people have learned. A lot of people have learned in the last 2 years, don't be patient, just buy. And that mentality has actually worked phenomenally in the last few years with
Yeah.
equities.
Dude, it's
But
worked great. For the last 6 years, it's worked fantastically well.
yeah, and it won't always. Like it does when it does, and then it won't always. And
Yeah.
people who are patient will, I think, get rewarded in the end. Because here's the other thing: if you get rewarded doing that, what happens is you like, okay, I'm going to do it again, but this time I'm going to do it with more leverage. I'm going to do it bigger, and then the day it breaks, you lose everything.
Yeah. The biggest concern is the day that the Fed can't backstop the market and actually have it show the signs of a bottom.
Yeah,
That's the biggest concern, is like, let's say, and again, I don't know what that's the thing, is like, I don't know what the catalyst is. I do wonder if, this year it's like everyone is so bullish on the market. That's the one thing that's kind of weird, is we went from like climbing the wall of worry all of last year into like post-election, everybody's bullish.
hmm
Most exposure from households in equities, pretty much on record. Financial managers and like the Bank of America like management survey showing like most managers are like crazy exposed and like 60 to 70% bullish. Um, oh man, I just heard this crazy statistic over the weekend. It was something like, um, I don't know if it was like a traders conference or like a financial advisors conference, but basically going into 2024, only like 8 to 10% of this group said that we were going to have a positive year in stocks, and we obviously had a good year in 2024. Well, this turnaround, it's like 60% of that group is saying we're going to have a great year in stocks. And so like the sentiment is just like almost pinned
hmm
bullish. And I'm a little alert, like I'm a little concerned by that. And the one thing going into this last week, I'm curious how this prints, but I totally missed this as and I wouldn't say I missed it, because there's nothing about what, a 4% correction. Like, there's nothing about this to me, Nick, that says, okay, we poke the all-time highs, we pull back about 3%. And there's nothing about this that shows a 3% pullback attached with an AAII sentiment survey that says this is the bottom.
Yep.
Right? Like if we were down, 10% again or 15% again, then sure, I can get a little bit more of that contrarian indicator to say like this is more of a good indication of a bottom. I
I
mean,
totally agree.
like when we talked about this area when everything was down, and what did I keep looking at? How many stocks are below the 50 period moving average?
Yep.
Right? Or how many stocks are above the 50 period? It was down to like only 10 or to 12% were above the 50 moving average. And like historically, that's been a really good indication of a buying opportunity. And it was. So that was a good buying opportunity. And we also had like a nice healthy correction. This was down. I mean, the S&P at the very end of the year had about a 7% correction or so, 5.5%. I think the NASDAQ was 6 or 7%. So 5.5% correction. My point is this. I mean, this was a 3% correction, and we had like the 12-month high in bearish sentiment. And I'm like, that just seems a little extreme to call that a bottom. And it's like, so is the market buying on like it's a it's the pain trade.
Yeah.
Make everyone think that everyone that's bearish right now is just going to get hammered by you got to get bullish because we're going to rip to all-time highs. And again, even two higher inflation readings like CPI and PPI, they weren't just like mildly hot. Like they were freaking like they were scorching inflation. But then I was reading like, well, this might mean a lower PCE. I'm like, I don't know how the hell that math works. How you can have higher CPI, higher PPI, and then expect the end of the month that like PCs is going to be crazy low. I don't get it. But
Chris,
it's not enough, man. It's not enough to break the market.
Yeah, I mean, that's the thing is you mentioned that, and I love that point that you made just about the AAII investor sentiment survey here. I've got it pulled up as well. I don't know why, I just prefer it in a vertical form, but
yeah,
the bearishness, right? Peaking out for the highest level that we've had in quite
12
some
months,
time.
right? 12-month high.
And here's the difficulty thing. I actually agreed with what you said so much there because okay, I would typically agree with you in the sense that that's a contrarian bullish signal. But with markets at all-time high, it's like, I take that with a grain of salt. Well, this is why I like looking at, when I look at sentiment, looking at across the board sentiment too. Put to call ratio, really interesting chart here as well. Shows something a little different. Put to call ratio, people cannot stop buying calls right now. When this chart goes very, very low, for the audience who's new to this topic of put to call ratio, that's just the options market volume of puts versus calls. Specifically, we're looking at S&P call and put volume. Well, call volume is off the chart, right? It is really, really high. People are very bullish in the options market. So I think that what we can take away from that is, markets at all-time highs, put to call ratios telling you that people are very optimistic in what they're actually doing. The sentiment survey is a sentiment survey, right? It is a survey. So I almost take the put to call ratio a little bit more seriously because this is actions. Sentiment survey is people, kind of in their sentiment about it. And like, if you ask me how I'm feeling, it's different than what I'm doing, right? So very interesting to think about that. I would say that people are very, very bullish on the market. The sentiment survey is still worth considering and looking at. But I would agree with you. It's probably more interesting when the market is actually selling off, like a confirmed kind of down move into bearish sentiment peaking. I'm going to start writing puts and buying stuff I like. But right now, I can't really justify doing that. And I just think that there's too many things. Market expectations are very high. You had hot inflation on the market ripped last week. It's not making sense to me. So I'm just going to wait. Like, there's nothing wrong with just saying, I can't. I'm not a buyer here, and that's not going to fit in with my plan here. I'm going to wait for the right setup.
Yeah, and that's probably going to be most of my year, to be honest. Like, I'm still going to keep that 40 to 45% cash at the ready. I mean, there's a couple stocks that I'd be pretty interested in. Tesla, for one, we've had a pretty decent correction. I mean, we're down 33% from high to low here. It's obviously off those lows slightly. I think Tesla has a good opportunity to kind of show some accumulation and basing around this like low 300s, maybe like if it's not done yet, maybe a Tesla gets to like 275. 275 to me is like a no-brainer level. I got a bunch of ratio spreads where I'd be willing to take some ownership. But if we start to kind of V bottom on Tesla and all of a sudden we're coming back to the highs again, well, then there's a ton of money to be made there in Tesla. I'm riding out some of these China stocks. So like Alibaba and Baidu, if those run, how long am I riding those stocks? I don't know, dude. I mean, if they're the way they're ripping right now, Alibaba, it's like owning this thing in basically the high 80s right now. With nothing, like I haven't sold a single covered call on Alibaba, and I'm super happy. Obviously,
I'm jealous. That's the
right
play.
And that's why with Baidu, I'm like, well, I pretty much capped my upside on Baidu for right now. Although I technically like this stock more. The difference is that Alibaba's mentioned AI, and that's to me like also one of the dumbest stories. Right? It's one of the dumbest stories in 2025, which is all of the earnings transcripts, there is a huge increase in who is mentioning AI to sound relevant, and whether it's true or not, we're about to find out. But that's where money is going right now. It's like everything AI. It's like, again, this could be years away, but I hope everyone's willing to acknowledge that AI is not going to offer more jobs. AI is going to offer jobs of people that can manage AI. But if AI is this big shift, there's going to be displaced workers probably like we've never seen before, and it might be years away, right? But it's coming, and this is another like weird pain point for later on down the road. Maybe it's a couple of years from now. Maybe this pain that the economy might ultimately feel is because Wall Street is representing corporate profits that are at all-time highs, and Main Street that is just absolutely getting killed by people can't find work. People won't return to office. I mean, you see what's happening. Like, people are like DC is having layoffs right now. Tech is having layoffs right now, and tech doesn't care. Like, these are probably tech jobs that might never come back, because once they start laying off, it's like they're not going to expand. Why would they expand when they can go AI? Why would they expand when they can do more with less? So I just feel like we could have this really interesting kind of bifurcation of like Wall Street is just everything is great and corporate profits are as high as ever, which is obviously a good thing to be an investor in. But Main Street would be jobs are steady now until they start to crack, and people are struggling, inflation's running hot, life is more expensive, and I could see a Main Street recession that gets pretty painful. You stretch the consumer too thin. If people are tapping into household equity and having to borrow at 6, 7, 8% to finance basically a HELOC on their home or some type of home equity line of credit, it's like that to me is really scary, because you have so much household equity, but if you have to use that and leverage it, that's a really tough thing, because at some point I feel like that ends badly.
Yep.
So
Yeah.
that's the thing, is like timing wise, that could be years away. So I don't know, man. And this whole thing on Department of Government Efficiency, they're trying to smoke out the government. They're going to fire a ton of people in DC. Okay, fine. That's a campaign promise, but it's like if we start to snowball into, well, now there's more layoffs elsewhere. I don't know, man. I'm just cautious, right? Cautiously bullish. I'm going to be patient. I'll probably continue to take the same like lame index related trades, but just be really creative on my option strategies. But it's been enough to, come out swinging with, I think last week I hit a fresh high in my portfolio. It's up like percentage wise, it's like, I don't know, close to 6% for the year, something like that. I was at 177 out of 2.4. Oops, fudge. Yeah, about 7% for the year. That wasn't bad. That's not bad for a month and a half. S&P's up 4%, sitting at these highs. Are we going to sustain these highs? Yes, no, maybe. Look, man, I think the dumbest thing would be to call the top. This market can totally test the highs and still go above them. We've got enough momentum. We've got enough enthusiasm. We got enough optimism, but it's hard not to see some of the contrarian side of it. Everybody's bullish, and these percentiles are so extreme. And it's like, but why? Like, why would it drop? I don't know. That's the thing I'm missing right now, is like, why? DeepSeek wasn't enough. Tariffs wasn't enough. Hot inflation wasn't enough. It's like, so this market doesn't care right now. And until it does, until price reflects that it does, then we'll attach a Y to it. But until then, it's like this market doesn't care until price suggests that it's actually responding to something, negatively.
Yeah. No, I mean, I'm in the same boat. It's not something I can really get bearish on, but also I can't justify chasing it too aggressively. I'm looking for creative ways to get more involved. But specifically, for me, I'm planning on writing a lot of out of the money puts and, basically waiting for dips. And I'm also trading other things. I'm long silver right now. So I've got like other ideas that are at play in the meantime, until we get something larger to work with on the indices. Chris, I'm going to back out, give you a little time. I got to run. But thanks for coming on. Thanks for taking over the stream. And I'll give you some time just to hang out with the audience. Everybody in the audience, make sure, if you're not already subscribed to Chris Pulver on YouTube, make sure to go find him on his own YouTube channel. And for those of you guys who are VIP members with us already, if you haven't picked up Pulver alerts, you can also see the trades that he's sharing inside of our Discord server. If you have questions about that, you can speak directly to our support team on our website, a1trading.com. We'll drop a link for that if you have any questions about getting access to the Pulver alerts. Okay, Chris, nice chatting with you. I'm gonna hop out and give you the show.
All right. Thanks, Dick.
See you, man.
See you, dude. All right, let's go another 13 minutes or so. Just kind of getting prepped for the week. I do have some earnings that I wanted to take a peek at. So that's just other stuff. That's where I'm at. So youtube.com/Chris Pulver, that's my channel, my Discord channel and stuff like that. But I'm here almost every day with the A1 Trading Team. Earnings wise this week, I've got some notables. I've got some companies I want to take a look at. So Baidu and Baba have earnings this week. That's two coming out of China. That's already had a great run to start out this year. Toll Brothers, I want to kind of get a pulse of the market on in home builders. So Toll Brothers, Lennar, DR Horton, Pulte, things, stocks of those nature to see. Right now, it's like we're still in this like supply side catch up for homes. But that's another thing I'm curious on, like for 2025, is like what the housing market's going to do. I don't see a bunch of other notables. There's some. I have a list in here that I could also share. I think I'm looking at I think there's 400 and some companies reporting earnings this week, and I have it whittled down to about 20 that I'm interested in looking at, and then maybe 3 to 5 that I consider trading for this week. But Etsy, Garmin, Carvana has been a ridiculous stock. I've sold 2 cars through Carvana. I bought a couple cars through Carvana. I thought the concept was great. I know that they were amassing inventory like crazy. They somehow survived everything that happened through COVID with just like the price of cars and everything dropping. I thought, man, Carvana's toast. But they're not. They've survived, and they've had a great performing stock the last year and a half or so, to the point where now it looks ridiculous. It looks like a Palantir. But anyway, so we've got some stocks this week that will be interesting. That is about it. Like notable wise, we're through Mag 7. I think the big one next week is going to be Nvidia. Nvidia next week is probably going to be hailed as one of the more important earnings to watch. I don't know why I have a vertical line on this chart, but I can get rid of that now. But as I mentioned, the drop in Nvidia was good timing to come back to this 200 moving average. We are filling the gap prior to earnings, so I'm going to be out of this trade. I was long with a 126 by 130 bull call spread, as well as a 126 or 126 by 132. So I closed this off for profit last week. I should have just waited until Tuesday. That would have been a little bit more time working in my favor, but it's fine. I took like a 35 and 40% profit respectively on those positions. But Nvidia coming into earnings, are we going to have Nvidia lift the entire market because of positive earnings, or is something going to be amiss? I will say that if Nvidia has anything that causes some skepticism in the market at all, a move down on Nvidia is going to be. Actually, I saw this like CPI last week was supposed to be like about a plus or minus 4%. Impact of the overall indexes, or like the S&P and the NASDAQ. Nvidia is like 6%. There's a huge swing up in the air with whether or not Nvidia can be positive or negative for the markets. It's like stock number 2. I think Apple's still number 1 market cap. Nvidia is number 2. Microsoft is still number 3. So that's coming up on the 26th, which is going to be next Wednesday. So certainly something to watch. This week might be a little bit lackluster. I looked at some of the numbers. I saw the last the last 15 plus earnings or more. We've had like 10 positive or 10 prints that at least get to the expected move, 7 that don't. So it's slightly in favor of at least gets the expected move over like a 13-day window. But the expected move could be, do we get to the highs? Do we have a $15 move to the upside? Do we have a revisit back down to these 120 to 115 lows? I don't know. It's just like with anything else, right in the middle. So could it go up? Sure. Could it go down? Sure. I don't know what's going to happen. I don't know the earnings going to print. You would imagine that earnings would be positive, just because this is a company that has just had crazy amounts of margin, has pretty much been nothing but earnings momentum for the last couple of years, as it rose to like literally becoming number 1 stock in the world. Right now it's number 2. But a lot of volatility, and also on the peripheral, a lot of leverage. This is the one thing that also leads me to believe that we're going to have a lot of volatility this year, because every major asset. Can you trade like a Tesla with leverage? Let's see. Somebody tell me. everybody knows there's got to be other ones like micros. There it is right there. So you've got TSLW. You've got 1.5 leveraged, 2 times leveraged Tesla. So it's like Nvidia has this, Tesla has this. You probably have this on most of your Mag 7s. Basically, these are all like derivatives of the underlying stock price with leverage, and there's options on these, and there's shares of these, and it's these type of instruments on top of, that are like overlaid with the underlying that I think you're just going to get a lot of price action volatility. I mean, the fact that this was like one of the single biggest market cap lops. Like $500 billion was gone in a day because of Nvidia's drop on DeepSeek news. That was the largest ever. And we're sitting here at these all-time highs, and it's just like these numbers are just going to get more and more staggering. But yeah, I just think be careful. Everyone asked me like, Chris, you trade this and it's like a double leverage. I'm like, no, I don't. I don't trade the 1.5 to 2 times leverage. Look, Tesla already moves enough in my opinion. Nvidia already moves enough in my opinion. MicroStrategy already moves enough in my opinion. Bitcoin moves enough in my opinion. It's like, that's why I'm saying if I want to eliminate some of the volatility in my portfolio, I'm going to trade a lot of indexes this year. I'll trade SPY, I'll trade SPX, I'll trade NDX and QQQ. The Dow, I'm going to hold off on Dow. Again, we have a pretty high bar count on the Dow, just like we do the S&P. I'd love to see something like this on the Dow. I'd love to see a range. I know, like I said, we could kind of poke these highs. If we do that with little to no momentum, I could see this offering up I'm not going to say I'm going to short the Dow, but I'm certainly going to wait to see where can I buy a dip. And maybe I'm wrong. Maybe this goes higher and higher and higher, and I'm just looking like, well, I guess I'm not going to chase it, but I'd rather look to see, can we have a reason to fall back into some of these moving average, to fall back into some really good support, to find, what I have historically used for a long time, which is a bar count. When the market stays X amount of percentage away for a long time, and it stays X amount of days away for a long time, I tend to take notice of that. And Meta's in that environment too. Meta's like 500 plus bars away. Nvidia was that stock earlier. Netflix is in the 300 plus bar count camp. I'm sure there's a lot of stocks at the 300 bar count camp. So anyway, actually, you know what? That might be one filter I want to build out. I got a guy. I might be taking a look at that for him or with him. Anyway, Russell, I like the fact that Russell's been sitting right around the 200 moving average. I have some income trades in here. So March and May. The reason I'm not trading the Russell a little bit heavier is because I kind of like the top 200. I want to take like the cream of the crop of, top 200 growth Russell, top 200 value Russell, because about 70% of stocks in the Russell right now don't make money. And that to me is a big concern with higher interest rates. Now, that being said, yes, we could have the 10-year yield following suit. If the dollar settles into that like 106 or 105.50 area, then the bond yields might continue to go down a little bit further, which I'm sure would be great. I also don't think there's going to be a bunch of direction. I could see bond yields not necessarily going below low 4s, but not really going above 4.8. So if we get this in the yields market, it's going to be higher for longer. That's going to be a sticky inflation. I don't see how things go like pure deflationary. I just don't see it. If we're going pure deflationary, I feel like there's going to be a lot of job losses along the way. And that's another thing we're not quite seeing. Like, jobs have been steady, non-farms have been steady. The whole thing I talked about with like AI, replacing jobs and taking away jobs, that displacement could be years away. I think that would be the Fed backstop that doesn't work. If you have such a severe Main Street recession, I think that the backstop from the Fed wouldn't work. I don't care if the Fed cut to 2% again. Interest rates, we're at 4.25. They cut all the way down to 2%. I don't think it's going to help if we're in a what seems like a jobs market that's never going to look the same. That's scary. Like that's scary to think about that. So I'm not dwelling on it. I mean, the good thing is I trade the markets, so I don't feel like AI is coming for my job. Granted, like analysis, I think that there are, Wall Street macro analysts that will lose positions because they can be done by algos and AI, and that's great. I mean, not that I want people to lose their jobs, but the fact you can have you can comb for so much information in such a short amount of time. It's just who has a skill set to utilize that information to be more of an effective analyst, you know? But it's like they're all going to tell you the same thing. If they're combing the data for the same thing, that's what's going to be interesting is like, think about the contrarian signal you get when AI says the same thing, right? I don't know. Call me, I don't know, pay me a skeptic, I guess. So anyway, that's it. I mean, rates are down slightly. We had this crazy high peak on mortgages, 7.8. That's really painful. Higher for longer. Maybe we have like a sticky mortgage between maybe 6 and 7% is going to be the new normal. Basically, the housing market is frozen right now. Not a lot of people are moving unless they have to. They're forced to, or they're downsizing. Most people are selling at the highs, which is okay. I feel like you missed out though. If you're selling your house now, they're sitting on the market longer. That's not a good thing. Futures wise, a lot of stuff I'm looking at futures. I mean, corn is coming off the lows. Soybeans still potentially settling in. Wheat, I'd love to see wheat starting to move off the lows as well. Commodity prices. Let me see what the Bloomberg commodity. So we've got the Bloomberg Commodity Futures Index. You can see just over these last couple of months, some sideways movement, right? So this is another thing just to keep a close eye on. I mean, if this starts to get stickier and rising, it's probably not a good thing. I just don't know, how much of this is reflecting what we see in CPI, what we see in, higher inflation readings, or is it just like, well, commodities as a whole are doing better? What I will say is if commodities are making a run, then we're talking about this entire rotation from tech into probably value plays. This would be more the energy play. This would be basic materials, utilities. That is one very likely scenario, which is, look, the S&P as a whole is valued at some of the highest levels we've seen since like topping out the market, and a rotation away from the what is high valuations and perceivably overpriced or overvalued. You start to see that rotation into other things. But what could keep 2025 going? 2025 going could be because the U.S. has done so well that now everyone else is catching up, right? I mean, I don't know if anyone notices, we talked about this late last year. The U.S. has outperformed essentially the world by like 3 standard deviations over the last, I don't know, let's say 5 or 10 years. So it's not a huge surprise that out of the gates this year, yes, we're up 4% in the S&P, yippee skippy, but NASDAQ is creeping up towards all-time highs still, like single-digit performance. But German DAX, UK FTSE, Argentina had a great year last year. It's pretty sideways. China's had a big recovery. Japan, like I said, is pretty sideways still. But like India's had a great run. Europe's had mostly a great recovery. Even looking at like Italy on its own, like the Italian 40's done pretty well. Greece has actually done okay, which Greece was like the crappiest country to invest in a decade ago. That was part of the reason they're like, oh, the European bloc is going to dismantle because Germany can't support Greece and Spain and Portugal and Italy. Anyway, that was a long time ago under Mario Draghi. So point is, I just don't think there's a one-dimensional trade this year. I think if you're following one thing, good luck. I'd love to say that NVIDIA is going to be a stock that can continue to produce good gains. I think NVIDIA is really, really vulnerable to a lot of noise. Look, if anything threatens NVIDIA in its number 2 market cap, NVIDIA is going to it's going to be a catalyst for a lot of pain in the markets if NVIDIA drops. And I'll just say, let's say, hypothetically, that NVIDIA rolls over on itself, right? Let's say NVIDIA, for whatever reason, just can't break these highs, and all of a sudden NVIDIA breaks this like rising wedge pattern. I would not want to be in NVIDIA calling, where's the bottom, where's the bottom, where's the bottom, because this thing could go and give back all of it. That'd be my biggest concern. And if we have number 2 in the market cap that's going to drop 70, 80%, there's going to be an incredible amount of pain in the markets to have that happen, right? Now, that's why if NVIDIA dropped 70%, would the S&P go with it? Well, of course, we'd have some pain in the S&P, but
having 500 stocks or having equal weighted S&P is a little bit different way of playing than just being all in on one stock, you know? So two things I think would help this year would be to see if we want to see and this is another reason Nick came on and was asking about indexes. We're sitting here at all-time highs. Here's another reason to see, are we truly going to see a sustainable run? Okay, this is equal weighted S&P. Are we at all-time highs in equal weighted S&P? Not even close, right? Not even close. And so if equal weighted S&P is going sideways or going down, I know the S&P can go higher, right? Because it's led by Mag 7. But if Mag 7 is going sideways, so like something's going to break. And it's either, yes, if Mag 7 picks up some momentum and starts to get back up here again, flows come back in, okay, fine. Mag 7 leads the way, maybe the broader market comes back. But my concern is that Mag 7 continues to be underperforming. And you look at equal weighted, also lackluster performance. And the same thing is true on, well, all right. That was a pretty good, okay. I was going to say S&P equal weight is lagging, but look at the NASDAQ. We clearly have some market interested in NASDAQ. QQQ dragging up to all-time highs. QQQE actually poked all-time highs. Actually, the equal weighted NASDAQ outperformed. Speaking of that, I do have a position here. I mean, it's not a big move, but I mean, I own this thing at $90. It's up 97. It's fine. Anyway, all right. So equal weight. Are we going to have a broader market lift, or is it going to be Mag 7? Is Nvidia going to step up and drag Mag 7 higher? Maybe it does, maybe it doesn't. So I don't know. We're just going to have a lot of like, this is moving, this isn't, this is up, this is down. I can see that being a really, really difficult year to be a stock picker. It'd be good if you're right, and it could be terrible and underperforming if you're wrong. But that's also why one of my favorite trades is staying out of the way, letting the market grind and chop around. Maybe we don't have a lot of direction, but if I can still produce, a couple percent a month, I'm really happy with that. And I can take on a lot less risk. I can still be braced for some type of downside shenanigans. And hopefully 2025 at the end of the year is like, it just felt like a good trading year where even the market did a bunch of stupid stuff, I still made money, but I think that the overall, like, everything's bull market, everything's easy. I would like to think that 2025 is not going to be that easy. So, I mean, if I'm wrong, then cool. Everyone makes money in 2025. But something tells me that a trading year is probably what I expect. All right. That being said, I think I'll wrap it up here. We're closed. Markets are closed. It's cool. I got another class coming up in a few minutes. The plan for this week, I will be pricing out some earnings plays, taking a look at these with some of the more highly impacted news events. And also this week, let me check just the other fundamentals. So let's go to the calendar. Anything else that stands out for this week? RBA is expected to be cutting rates. I think New Zealand's expected to be cutting rates. We got CPI out of Canada. Yep. So looking at a 50 basis points cut out of New Zealand, a 25 basis points cut out of RBA. This also would lead me to my Aussie New Zealand position, which is still long. So I'm still long on this is Aussie New Zealand currency. I'm looking to see if that cash rate differential gives the Aussie the upper hand, and I'm starting to take this up towards. I'm going to see if this gets up to like 13, 1400. I think 14 to 1500 probably takes as a profit. This goes back into the highs in 2022. This window to me would be pretty good. I'd love to see this trade actually. So we're going a little bit higher, a little bit higher. If we start to break these highs, I'd like to see a nice little trend to this 114, 115, gets a little overextended, and then hopefully it lines up for a really nice short. So maybe something in the currency market that gets me excited for the first time in a while. What else this week for news? CAD CPI. There is your, everything out of New Zealand cutting 50 basis points. U.S. news meeting minutes on Wednesday at 2 p.m. Okay, fine. Just again, meeting minutes. Fed's pretty much going to say the same message. We had a 2-day testimony from Powell last week. Market didn't really move on his words. Anything else? Unemployment claims.
Friday the 21st, anything here, U.S. Manufacturing Services PMI, that will matter a little bit. That'll matter. Got a lot of PMI data on Friday. Okay. So we'll see. Could be path of least resistance. I don't see the market being crazy disrupted this week, honestly. News-wise, it's just like more of the same. So maybe NVIDIA means that much, where the market's kind of hinging on a positive print for NVIDIA, or at least price action to support NVIDIA. And if we blow through the highs, we blow through the highs. This is one trade that I did end up taking last week. So I've got on this chart here, MES. So I did a micro E-mini futures. So this is MES. I'm risking about $990 on the trade. It looks something like this. I have on the bullish side and the bearish side. So that's my dead zone. That's my risk. This is what my option risk graph looks like. So I'm risking about $990 right here. I've got about $1,500 of profit on the put side and about $750 of profit on the call side. So it's just shy of a 1-to-1 on the call side. So if price goes higher, I can still make some money. If price goes lower and goes after my 200 moving average, then I'm going after a bit more profit and some reward to risk that's greater. But I'm doing this out to April. So I think if we go all the way through this month and through March and through April, whether this market is ripping higher or having some type of volatility event to the downside, I'm hoping to take advantage of that in some way, shape, or form. On that note, I'll end today with VIX, which is at 14.78. This isn't a position I'd say I want to get long VIX, but it's not a position I'm going to say there's no reason to short VIX. I think the issue that I'm having right now is that with this recent decline in the VIX, premium selling has been a little bit tougher. Unless you're selling IV, like high IV stocks that are, having earnings, that's pretty much it. Like the major IV catalyst has been earnings. So I want to stay away from stocks that look like, here's an interesting sign. Cathie Wood. Like literally everybody hates Cathie Wood and hates Jim Cramer, and they created like inverse algorithms to trade the opposite of what they call. But ARK with disruptive technology is actually starting to turn the corner a little bit. So Cathie Wood still has a job. That's good. But I just think that off these lows at 36, we came off these lows. This is May of 2022 all the way to, August of last year. But that was a pretty strong bottom. And now this, again, we're way off from these crazy all-time highs, but at least it's showing some signs of like, well, it's not beat up to 35 anymore. So I just thought that was interesting. It shows me that there's some money that's trying to be thrown around. It's not just Mag 7. I think that's the one thing that was pretty obvious this year is like Mag 7 money is going elsewhere. I think US money is going elsewhere. Like value has been seen in foreign markets, and value has been seen in other things like non-Mag 7 stocks. So energy, I still think is going to be interesting. I don't really have a big plan on oil this year, as much as I want to just say that oil support is in at 60 and change, like $65 to $66 oil. It's like that's our support level. Maybe it is until it breaks. That's my concern. Is like I think something. I don't know, man. Maybe this year is like wild and crazy and something breaks, or maybe this year is just super boring and we just have a bunch of ranges, right? So I know how to trade ranges. I've got cash at the ready for any type of something that breaks. So I think that's giving me it's helping me cast a wide net. It's helping me get a lot of like flexibility in my trading strategy and have a lot of resilience in my portfolio. So again, I'll carve out whatever I can. If my year this year is 20, 30, 40%, cool. I'll see how I get there. But it's certainly not going to be chasing. That's one thing I'm refusing to do. It's like, I think there's opportunities this year that will reward being patient. And if it's not, then it's not. But patience at some point will probably win out. But I think the surprise this year is going to be the why. Like, why did that happen? Who knows? It could be Trump. It could be Elon Musk. It could be China, US. It could be tech. It could be tariffs. It could be the Fed. It could be a lot of things. It could be something I'm not even thinking about right now that I've never even heard of right now. But I think the market's going to latch on to a lot of things noise wise. I think news is going to be very noisy this year. If you're not ready for that, then you haven't been paying attention for the last 6 weeks. We're going to have lots of headlines, and the market's going to cling on to it like it means something. And the price action in the market is ultimately going to be your best barometer for whether things are really bearish. Here's a good example. This right here, okay, during tariffs, during DeepSeek, did this really make a big adjustment? This was the 18th of December. The last time this is your basically your high yield bond ETF. So to me, what this represents is if we see that the markets are selling off, if the markets are selling off and this is down, I'm not that excited about buying the dip. Okay. But if the markets are selling off and this is still like really, really tight price action, probably buy the dip. But we have some of the tightest credit spreads right now between like AAA, BBB, CCC, some of the tightest credit spreads we've seen since before the great financial crisis in 2007. Is it like a sign of bearishness? No, it just means like right now, nothing in the system is showing illiquid. Nothing in the system in financial markets is showing that they're scared. I think the optimism is still there. So despite this AAII sentiment survey, I think the optimism is almost too high, in my opinion. But it's not a contrarian. I mean, I think there's plenty of room for stock market to have stock buybacks, mergers and acquisitions, cash finds goes into the system, household equity. It's like there's still money like getting pumped into the system. But like I said, if we have like a nasty correction in the markets and this thing is down and breaking fresh lows, then I might expect more downside pain. But until then, we'll see. We'll see where like institutions position for buying puts and how much they're going to be protecting, how much this move might mean something. So stay patient or be stupid and be aggressive. Buy Bitcoin, buy double levers, everything, and blow up your account. Choice is yours. All right. Happy President's Day. We'll see you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.